Hello, everyone, and welcome. I have an awesome guest here today, Scott Carson. He is with the We Close Notes, and he has a podcast with the same name. He's a real estate investor and just tons of experience in real estate. I just want to say, Scott, welcome.
Hey, man, I'm so honored to be here and jacked up and excited to deliver a lot of great content to your listeners out there. Thank you so much for having me on.
Of course. Why don't we just jump in for those maybe that have come across Scott? Because if you're in the podcast and you're kind of in the real estate section, you might have come across Scott. If you're not in the real estate section but would like to be and haven't heard about Scott, why don't you tell them a little bit about your story?
Yeah, no problem. Yeah, I run a company. I'm CEO of WeCloseNotes.com. I've been I was talking to somebody today. I was an active real estate investor since 2002 when I bought my first house, and been a full-time real estate investor since about 2005, 2006. In 2008, when everything hit the fans, I was a mortgage banker at the time as well, had my own mortgage company, and I jumped from that and started buying distressed debt. That's what non-performing notes. I started buying the mortgages that people weren't paying from banks and hedge funds. I've been doing that for the last 10 years. I'm one of 3 or 4 people in the real estate industry that teach the niche of buying non-performing notes. You'll hear a lot about owner financing or performing notes, but not a lot of people talk about non-performing side, the naughty notes. You know, what happens to the 15 million people out there that didn't pay their mortgage in 2010. So been an active real estate investor, I said, for quite a while, just focused on this one specific niche of real estate, really carved out a really nice living, and helped a lot of other investors that were tired of chasing the rat race of either, dealing with toilets, tents, and trash outs, or lazy landlords, or REO refugees, as I like to joke about, who are having a harder time finding deals. We've helped a lot, thousands and thousands of real estate investors through our workshops, or even like through our podcast and the Note Closer Show, or all the online training that we do as well on a regular basis. So we're very big about helping people, because at one point in the downturn, I was a deadbeat borrower as well. So I have a lot of empathy for people that have gone through financial hurdles or hiccups. Going through the Big D don't mean Dallas. I've been there. And so that's kind of a little bit about my story. Just been buying debt for 10 plus years, bought over $1 billion in debt on residential and commercial properties. And we really strive to make America great again, one mortgage at a time.
So let's talk a little bit about the debt buying, because it seems like if I was somebody who, I would think that you would need to at least have an income being generated in order to get into this, because every investment is a risky deal. So you can't bet all your chips in this idea. So if someone had, say, I don't know, $200,000 in their savings,
Yep.
If they were to buy these real estates, do they need to be certified? How do you even buy distressed? I understand how you buy debt from, say, accounts receivable. You're buying notes on that,
Yep.
but
how do you? If you look at the accounts receivable, there's something behind that. There's something of either product or things like that. And so that's the big thing. I know where you're going with the question, because I get it all the time. People are used to going out and buying a rental property or a car or something. If you have a debt, and this is one of the big things people don't realize, everybody's in the note business. Everybody. If you've got a debt, student loans, mortgage, car payment, credit cards, you're in the debt game. You're just on the wrong side of the receivable, okay? You're paying to a bank of some sort. And that's what happens when we buy the debt, is we become the bank. And we have a lot of flexibility to do that. But how to get into that? You don't need $200,000 to get started. Now, there are some things that you want to keep in mind. This is a whole different thing than your whole, HGTV flip this house.
Yeah.
You don't go out, buy a house for $20,000, $100,000, put $5,000 into it. Now it's worth immaculately $200,000. It doesn't work that way most of the time. So the fact that we buy this debt from banks and hedge funds, we're dealing with departments that aren't the same that you're used to. You're not going to call loss mitigation. You're not going to call the short sale department. You're not going to walk into the Chase Bank across the street and say, I want to buy your notes.
That's exactly my question is like,
Yeah.
those big banks, I mean, they have ultimately, if you are a hedge fund, I know that's one of the things that you talk about as your point of sale. You're buying it from banks and hedge fund. But if you're a major investor and say you come up to a bank and say, I want to buy 10 properties, a bank's going to say, okay, well, let's look at the deal.
So let me clarify that though, because there's a fine line here, and I don't want people thinking you're going to walk in a bank and say, I want to buy 10 properties, and I'll give you the notes on that. It's a whole different mindset. You're buying the mortgage, okay? You're buying the debt. There may be somebody that took out the loan is living in the house. They're still the homeowner, okay? So by buying the debt, when you're going to buy the debt, you're dealing with a couple of departments called the Special Assets Department or the Secondary Marketing Department. And this isn't really a real estate transaction at first. It's a business transaction where since a borrower has not been paying on their mortgage, let's use some generic numbers here to make it easy, right? $100,000 house, the borrower may owe 110 because they're a little upside down, market dropped a little bit, or they're late, and so that amount got added to the amount. They haven't paid in usually 6 months, 12 months, sometimes 3-4 years. I may buy that debt, okay? I'll buy the debt at 40, 50 cents on the dollar. So I'll buy the debt at, say, $55,000, somewhere between $50,000 and $55,000, because I don't usually go over 50, 55% of value of the property, okay? Well, now that I bought that debt, so the bank got their 50 grand, they can move on, because now they can take that 50 grand and recycle it 10 to 15 times by, velocity capital, lending that money out, making points. So that's how banks make money. Well, I'm the bank on this asset where the borrower owes me 110, the house is worth 100, I'm into it for 50. I make my money by reaching out to the homeowners. Hey, what do you want to do? Your mortgage payment was $875 a month roughly. Can you start paying again? What happened? What's your country western song? You get laid off, you get sick, whatever. Western,
yep.
Okay. We've got a whole different bit of exit strategy. My goal is not to take the property back. My goal is to actually get the borrower to start repaying on time. So instead of rehabbing the property, I look to rehab the borrower. Okay. So let's say their payment's let's just make it easy, number $900 a month. Okay. Well, $900 a month, if I can get you to start paying on time again, forget a year or 2 years you're behind. If you can start reinstating the payment, $900 a month times 12 is $1,080. $10,800 divided by a $50,000 investment is roughly about a 22% return on investment immediately, right?
Yep.
10 grand on 50 investment. Well, if you get reperforming and I can get you start paying for 6 months on time, that's now called a reperforming asset. And I can sell that note off at 80, 85 cents on the dollar of the property value. So 12 months go by, I got 10,000, 11,000 in payments. I can sell that note off now somewhere around 85, 90,000 bucks. I just make another 30, 35, 40 grand 12 months later. I just made $50,000 on a $50,000 investment in a year. That's pretty good, right? Pretty good.
Yeah, okay? It is really good. I mean, people are trying to investments today are 5 to 8% right now is what people are getting.
I wish it was always that way, but a lot of times, we can get them reperforming roughly around 40, 50% of the time. Depends on the asset, depends on what's going on with the borrower. A big chunk of the time, we just give them cash for keys to walk away. You can't afford payments. What you can't afford doesn't make sense financially. Rent's supposed to be $1,200. If you were to move out, you're going to pay $1,200. If you can't afford to pay more than $900, then we need to talk about you kind of leaving. Okay, here's some cash to move on. And then we can sell the property as an REO. And then we still end up foreclosing around 30, 40% of the time, where that takes money to foreclose. That's $3,000 to $6,000, depending on the state it's in. Never buy in New York or New Jersey because it's forever to foreclose there. Okay. But there are states that'll foreclose fast. Like here we're in Texas. We do everything fast here in Texas. Fast highways, fast foreclosures, fast executions,
Yep. The Texan way. I know there's a lot of real estate investors that buy in Texas.
Because
it's quick.
Since we can foreclose fast, it also means the banks are going to charge more for that non-performing debt because they know they can turn it quickly. Yeah. So while I live in Austin, Texas, hook 'em horns, all right, I don't buy a lot in Texas. I buy a lot in parts like Ohio, Michigan, Indiana, Alabama, Florida. I bought a lot of because I can buy stuff at better discounts. And the beautiful thing is, a lot of people think, oh my God, does that mean I have to fly to Ohio, go look at the stuff in Columbus? No, no, no. There's realtors. I'm not the person calling the banks because there's lists that you can reach out to. I'm not the one calling the borrowers. I have a servicing company that handles all that. So what's great about this versus rehabs, like you're not the one doing most of the work. We hire investors. I mean, sorry, not investors. We hire like servicing companies. They're the ones that are calling out. We hire attorneys to foreclose. We hire realtors to drive by, take photos, or door knock to the borrowers. And then that way I can run a multi-million-dollar portfolio from either here in Austin, or if I'm on a cruise or on vacation or wherever, I can do this all behind, the safety of my office, or sitting on the couch in my pajamas, if that's what you want to do too.
So what if there's a situation, like, have you come across a situation where someone takes equity out of their house because they, that's so common, especially right now where kind of there's this mad run on value.
Yep.
The second thing is people also use their home sometimes as a collateral of some sorts. An addition, they personal financial statement, they put whatever it is, guarantee.
So that's I mean, the thing you got to realize, I'm only going to buy a first lien position note, first and foremost, first lien position. So somebody is on a first lien position on a house, the mortgage is going to take place basically behind taxes. I'm going to make sure taxes are paid off most of the time because that's really the only way I can get wiped out. Now, if they go out and get a new loan, a cash out refi to pull equity in, they still owe that note. All right. This is why it's important for me to buy it at a discount, so that if I have to foreclose or I have to put a little bit of work into the property, I want to make sure I have that spread on the back end. Now, if it's a pristine property and I'll go a little bit more, up than my 50-60% of the dollar. But if they use the property's collateral, that's okay. That's a junior lien. That's in third place. I'm still going to be in first lien position. And when I foreclose, I'm going to wipe out any of that stuff that's attached. A second lien, like maybe it's a home equity line of credit as well, or they, collateralized it against something else. Hey, I'm going to wipe that out with my first lien foreclosure. Or if they're working with me, a consent to judgment. Sometimes I'll pay off or negotiate with the junior lien holders. Like, hey, there's a second on here for $30,000. Hey, I'll give you $1,500 because that's what's it going to cost me to foreclose and wipe you out. You either get something or get a whole lot of nothing when I finish up with you. That makes sense?
Yeah. So, I mean, this is a big question. I mean, you're getting this across kind of the YouTube channels about this idea that we're kind of in this bubble again.
Yep.
So what are your thoughts on that? How are you approaching it with buying distressed assets or distressed debt and so forth?
No, assets is correct there, not just distressed homes. You're good. You got it. You're learning. So I'm a big believer that we are in a bubble. We're already starting to see things with interest rates going up. Not a subprime is back, whether you want to believe it's been back for 2 years now, where people are giving 100% financing on people with 520, 500 FICO scores is crazy. There are lending programs like that in all 50 states. So the way I look at things a little bit different. Instead of looking at the individual asset and getting all my numbers bogged down, television on one asset, since I'm buying across the nation, oftentimes I'm buying at 10, 20, 60, 100 assets at once. Okay. Now, that doesn't mean you have to do that. We have a lot of students that are going out and buying one asset here and there for like 20, 25 grand, or even using other people's money to do that. Dollar cost averaging applies here when I'm buying in bulk. If I'm buying 30 assets, I'm going to hope they'll all be home runs, but that's not always the case. We get a lot of singles, a lot of doubles, and then we get some big hits, where they get reperforming, 40% of the portfolio gets reperforming. Great. We look to sell those off and make a big bundle. But the others, hey, we're looking to foreclose. We've got some cost repairs on that. So I'm not so worried about a huge bubble burst and values dropping. I mean, we're already seeing that in areas, but most of the time I've already sold off my assets in those areas. And I'm looking at, the fact if I'm buying something that's still 40 or 50 cents on the dollar of value, I have that kind of recession buffer built in. I know, and I can sell that asset off, sell it to a local fix and flipper, or sell it to the next door neighbor, or I can get creative when I take the property back off for owner financing and just ride it out for a while if I need to. But I'm already seeing, especially in the higher end areas, Aspen, Miami, Dallas, they're starting to see prices drop there in those hotter markets. Days on market are starting to expand. So people are having to drop the values. drop the prices to try to sell off their underlying financing, whether it's hard money loans or trying to get their money back as fast as possible. So the thing to keep in mind is stick to your numbers, is what I always tell people. If it doesn't make sense to buy it at 50, don't pay 50, pay 45, pay 40. Don't get caught up in, I don't want to say mob mentality, but like auction mentality. That's why a lot of people say, oh, it gets bid up. I walk away from that, you know?
Yeah. The emotional of, I mean, I already know that sales technique because I've seen it so many times, and
right.
and you get caught up in the sales moment, and it's like, okay, now let's get your credit card, and like so you're it's just so easy to spend money and so much harder to earn.
Amen to that, man. And that's why I tell people, look, stick to your numbers. We've had a lot of other investors come into the note space in the last year, 2 years, that are overpaying for assets because they can't find an REO or a property. So if they're overpaying for a note, they're paying for the price that they would like a traditional property. I'm like, whoa, this is a different model. You've got to work with the foreclosures or the evictions and things like that. You've got to have some servicing income. You got to have some. It's not going to be, hey, you're going to buy it and flip the property in 90 days. That rarely happens. So it's a longer play for what we do. But the fact that we're the bank, we have a lot of exit strategies. We have a lot of options to offer the borrowers. If they tell us to go pound sand, that's fine. We stick our bulldog attorneys on them and they run with it as well. But when you have kind of an uneasy feeling in the market, with property values dropping, default rates are going to go up. That means more inventory for us as note investors. And so I'm excited. I've changed what my focus has been dramatically in the last 12 months, focusing on a couple different markets than when I bought in a couple years ago. I used to be very, very heavy on Florida. I think Florida's kind of overpriced now. So I've spent a lot of time in Michigan, Ohio, Indiana, in those markets, finding really great deals of people out there that I can really make a lot of money, but also do some good with it. And, those are hardworking, salt of the earth people. They just want to stay in a house most of the time. And so if I can buy a note on somebody who's got some emotional equity, they've lived in the house for a while, they work nearby, they got their kids, I'm willing to work with that individual. I mean, if I bought it at 40, 50 cents of the dollar, I got some flexibility. That's my first goal. Keep them in the house. Keep them in the house. Let's work that way. I would rather keep them in, but I don't run a charity. I donate to charities. I am not a charity though, too.
Well, they said, if you have a business, run it like a business, and then give to charity. It's two separate things. Your business isn't your charity.
And don't get me wrong, I've helped some homeowners. I mean, I've forgiven loans. On that same example I gave earlier, if the borrower came to me and said, okay, great, I'd really like to do it, but I'm upside down. But like, listen, make your mortgage payment on time for 12 months and we'll forgive. We'll do appraisal on the property and I'll forgive you that 10 grand that you're overpriced as. I'll write off 10 grand, 20 grand, 30 grand. I mean, we do a lot of short sales here too. I'm the fastest short sale negotiation company in America. You tell me what your buyer's going to pay. I'll look at my numbers. If it makes sense, let's do it.
Yeah, it comes down to what I've learned about real estate. I mean, I've only bought in one real estate in my in the last currently, and it appreciated in value, and it was a good investment because we bought it, after after it was the crash. So sure. it was a good investment, and then we took that money and for basically a gap time, we moved to South America. And so we lived there and we come back and I'm like, holy smokes. Like all the prices, like we live in a city up in the hills in Oregon, and the prices are just exploded. Like
there is a lot of crack being smoked in there in Oregon, or I should say green crops a little bit differently for the pricing in Oregon and Washington State.
Oh my goodness. Even, I mean, rent is ridiculous. I mean, just all around. So your business model, let's get back to your business model. You kind of, how it looks like you're kind of diversified. You've been doing this, buying these distressed debt assets, and now you have this, you're teaching other people about this. Mm-hmm. Can you talk about a little bit about your impact that you want to kind of accomplish in the next couple years, 2 to 5 years? Like, what is kind of your viewpoint in this area?
Yeah, no, that's a really good question. So back in 2004, I had the really great, very lucky to work with a couple of people that taught me the note business for a couple of years, like apprentice. And I started working with them out of banking. I was a banker for JP Morgan Chase, and it was a couple of years after I'd been a deadbeat borrower back in the day. And I always promised that if I got my assets out of a sling, I would definitely help anybody I could. And so when I left and started doing my own thing, my goal was always to help investors as best I could. I'm a big believer in co-opetition. All right. We're all looking for our own business. We're all competitive, but in the niche of note investing, which is still a very, very small niche, I'd say there's probably less than 10,000 really true note investors out there. Now, I'm not talking about the big funds. I'm talking like, guys like you and me, women like you and me. Okay. Well, I'm not a woman, but anyway.
I know what you're saying. Whatever you do on your private time.
Yeah, my name's not Caitlin. All right. What I'm trying to get is I always had a big goal to help people. And when I got started really doing this full time in 2008, there wasn't really a lot of people doing it. A lot of people, the downturn were all, the sky is falling, this falling. It was, but I started marketing online on like Facebook, and hey, here's the deals I came across. I literally was dialing for dollars to bankers, getting lists sent to me, and I'm like, I got to figure something out here. I didn't have any money, so I started using other people's money, and that's why I started teaching, because people wanted to learn what I was doing, and then they would go through, okay, that's good. I don't really want to do that much work. Can I just write you a check? Great, sure. I'll glad to help you take your money and give you a nice return on your money, and it's a win-win across the board. So that's kind of what my education evolved from, was the fact of trying to help people do this and teach them how to do it. I mean, we've had very good success. I've got hundreds of students that have, left their jobs, got out of the rat race. They're buying notes on a regular basis. They're living a great life. They're doing what they want to do. They've bought hundreds of deals over the last couple of years. And we got another student who just bought their first 30 deals this year. They quit their job in August. They've been, full-time with this. So that's the beauty of it. If you can buy this debt and get it reperforming, it's going to replace your income, and you can do whatever you want to do from the luxury of your own home. But my biggest goal, especially we set a big goal beginning of last year, was to help educate and create 10,000 note investors over the next 4 years, or 5 years a year ago, but 4 years now. And we hit past our 2,000 mark last year. We had like 2,200 students across a variety of channels. And that's our big way, because I believe there's a big thing coming. And note investors really can do a lot of good by when they buy the debt, by working with the homeowners. There's something that happens there physically. If you've never been behind on your mortgage, you know that it's a constant weight on your shoulders. Is the door going to knock? Are you going to be a certified lender? Are we going to get foreclosed on? Are we going to be evicted? I mean, I deal with these stories all day long when when we're calling these borrowers and talking to them. And so, trying to help investors find deals and make money, and teaching them how to raise capital, because there's a lot of private capital sitting on the sidelines, $7 trillion in private money sitting out there. It's just not making anything. People are looking for opportunities, and if you can go find the deal, he who has the gold makes the deal. But in this case, he who has the deal is the gold. It's not the funding. There's so much private money not making anything, as you talked about. They're making low returns. Offer something double, triple what they're getting in a bank or a money market fund or something like that. They're going to think you're God. They're going to be naming their kids after if you can do it on a regular basis for them. So that's been our biggest goal, is to really not only help investors, but we like helping our borrowers too. And that's our big way of giving back. I got my ass to this thing. I had some people that helped me out. I'm always glad to talk to investors out there that want to get in the business. I mean, that's why we do the podcast. I mean, we celebrated our 400th episode today with the podcast.
Congrats.
Thank you very much. Been doing it for 26 months, but we've been doing videos and training and webinars that are all available online and YouTube. I've been doing webinars since 2011 on that. So there's a lot of education out there. We got some great classes that do some great stuff, but really the classes help us raise capital, help us actually teach people how to do this, so that when we do get a big pool in, we can turn around and say, okay, hey, you're buying in these 3 states. Do you want to buy something off this list? And if we buy in bulk, we now get a better discount versus me just going buy 1 or 2 and then not do anything else with it. But that's kind of a long way around talking about what our focus is.
So you're creating a sort of, there's several facets, what it sounds like, to We Close Notes. I mean, you have the people, like you said, that are just giving you straight up money.
Yep.
There's the people that are pulling together the co-op sort of.
Yep.
So you're creating a community out of this, and then there's
Yep.
the people that are trying to do it on their own, and they're just taking the training, and then going.
That's fine. People want to do this on their own. It's great. One of the biggest things that changed my business was in 2010. I'd just been divorced for about a year and a half, 2 years, and the market here in Austin was crazy. And that was the peak of the market. 15,000 homeowners underwater, foreclosures everywhere. Okay. You had people running all over the place, and hang on a second here. You had this happening all the damn time. All right. And so I sold everything in Austin. I literally had a garage sale, sold everything except my truck and my dog. And we jumped in my truck, and I drove around the country basically for 3 years nonstop, talking to real estate investors, going to investment clubs, going to bankers in Florida and Charlotte and Mississippi and Alabama and California. For 3 years, I really built a network across the country of investors that I could reach out to in case when I get these lists in, then I could reach out and say, hey, here's something in your backyard, or here's something in one of your states. Because that's really what was lacking in the industry. There's not an MLS for notes, okay? There's not really an online organization that really keeps track of the non-performing stuff. It's all about what you do and how many, these bankers aren't the most marketing savvy people out there. And so that's one of the biggest things I see is we have really built a network. We've got some great Facebook groups that are so interactive and sharing resources and attorneys and realtors and tips and secrets to really help everybody succeed and close on more deals. And not everybody is like that. You think about the wholesalers, the rehabbers, the realtors. It's pretty cutthroat island kind of time. You know what I mean?
I've been reading about some of that stuff recently. I mean, there's a big real estate investor that I listen to one sometime is he's in Florida. Everybody kind of knows the guy's name, and there's very vocal on that certain mentality or way of investing, and so kind of. There's this area that people don't really think about, kind of these outside edges of investing.
Yeah.
And on a time when the market is collapsing, this is like the perfect type of business, because it's like the banks are going to have to take a loss anyways, and they don't want to have to deal with it because there's so much happening all at one time.
Yeah.
So I think if someone's, has a business, and there's something that, I came across this wealth triangle thing.
Yeah.
And I want to talk a little bit about the investors that get into this that don't keep their day job or don't have the cash or the business to kind of hold this up. What is kind of your around this idea of having your high income skill plus, or, a scalable business and then investing into something like this?
Well, so I'm a big advocate that if you don't have money, you should not quit your job to go do this. Because if you're looking to do this full time right off the bat, you're going to go broke because it's a longer process. Okay. I had somebody come to me, hey, I need to make money in 30 days. I'm like, then you need to go get a job. And they're like, huh? I said, because this is a process. It takes time to market. You got to build some marketing skills, okay? It's not the same thing as going and buying a property off the MLS. These deals don't just fall off the trees unless you're reaching out. I'm going to make a big caveat here. You're not going to call Chase or Wells Fargo or Bank of America and say, I want to buy your notes. They're just going to laugh at you and hang up on you, okay? We buy the majority of our stuff from smaller regional banks. Don't get me wrong, we bought some from some big names too, like Capital One, some other Quicken Loans and things like that. But most of the time, you've got to reach out on a regular basis through LinkedIn or email blast or some of the other websites that we work with to really get these lists and then work through them. It takes some time. So I'm a big proponent. If somebody wants to go from working their day job to doing something, any type of real estate investing full time, you've got to cover your monthly nut. Okay, especially if you're married. Let's just face it. And this is nothing bad. It's better when you have your bills paid on time. Can we agree to that?
I would definitely agree. Amen to that.
Amen to that. Exactly. All right. So what I tell people to do is look at what your monthly nut is. If you need to make 60 grand a year, that means you need to bring in 5 grand a month, right? So let's target looking at some deals you can get reperforming that'll start paying off that $5,000 a month. So if you can get 2 or 3 assets that'll pay you $500 a month, that's $1,500 a month coming in cash flow. You're a fourth of the way to leaving your job. Okay. So work smart, because literally you can make 6 figures in 12 months of this if you work it right. You just got to start looking at those KPIs, those key performance indicators, to know where you're at. I don't tell people to leave their job unless they're absolutely ready. A lot of times I talk them out of it. Like, how many deals have you closed? How many are performing? How many are non-performing? If you're non-performing, did they sell and you get a big check? Got a big check? Okay, great. But if you don't have that cushion, that wealth there, then you need to be marketing for capital, going out networking at your local real estate clubs or your meetup groups or your self-directed IRA clubs, or mailing to IRA investors. But you've got to build that plan and realize this takes time. It's not a get-rich-quick thing. It's a get-rich over time. I compare it to the tortoise and the hare.
Yep.
This is the tortoise way of investing.
And I think that's what, in this economy, especially, people are seeing all the money. I just had someone I spoke to, and they had a perfectly good skill where they're at, but they're already like looking around and saying like, oh, there's all this money being made over here, or all this stuff here, rather than just improving their high income skill, improving it, making more, and then investing in the things you want to invest in. Because, oh my goodness, it's just investments. It's called an investment for a reason.
Well, it's also called, I call it the shiny object syndrome, where people are chasing squirrels. And you want to pull out an assault rifle and murder that rabbit or that squirrel. You want to pull the trigger and shoot that squirrel. Yes, I love sound effects. Okay.
No, I love it too. I need one of those boards that just, you just click on it there.
Yeah. So what I tell people is like, listen, if you're not going to be doing this full time, you're just because you enjoy your job and you've got a marketable skill, there's nothing wrong with notes, but you should probably focus on performing notes. Something that's a little bit less passive. Something that's more passive than less aggressive, because I compare what I do with non-performing notes to being like the Jerry Jones, the general manager of a team. I'm not the one out flipping burgers or selling sodas or catching the pass from Dak. I'm upstairs putting my people to work, have them go do it, and then kind of getting everything come back to me and making decisions from there. And that's, if you're not organized and you're not, you're one of these people that likes to buy everything that they go to, note investing is not for you, because you'll get frustrated, you'll get burnt out because you're not seeing immediate results. I mean, you will in some cases see some things, but it takes time. This is a business, okay? And I'm a big believer too that you have to develop some marketing skills, whether it's through doing a podcast like this or doing a webinar or email blast out to your investors or your database to share what you're doing to raise capital, or to other investors you meet at expos or events. You got to market on a regular basis. We're all, whether people believe it, let's be in the 21st century. Yes, I'm in real estate, but really my company, my firm is more of a media company more than anything else. We're all marketing. And if you're not marketing, you're in the 21st century still doing the old way of doing things, like sending out yellow letters and door knocking. You can go continue to do that and bang your head, but you're just not going to find the deals and going upstream to where the deals are. And going upstream is going direct to the source, going direct to the banks. That's what I love about it. We see deals 6 to 12 months ahead of time, but a lot of times our deals come from us marketing. An asset manager is on my email list. They've been getting emails from me for 6 months. They don't have anything for the last 6 months. Boom, they got something on their desk that they can sell. Who you going to call? Note busters. Okay.
Yeah, I think Gary Vee was the one that said, if you don't look at your company as a media company first, and whatever you do second in this 21st century that we exist in, forget it. You're already behind in the times. And most people, like I look at your website, for example, and you give three options. It's like when you're scrolling down, 3 options. It's that you're getting people. It's not just a business card on a web page anymore, or a brochure. And so why don't you share a little bit about kind of what's your kind of goal? You must be super excited about what's coming down the pipeline, because I've listened to hedge fund managers. They're talking about that the market's going to make a correction. It has to. They didn't make any changes to their investment debacles, from 2008. Whatever was happening back then is still happening today. So
Big Short is going to repeat itself again. If you've ever seen the movie The Big Short, it's going to
awesome
happen
movie.
again. Yeah.
Not awesome in the case of what happened, but
It's awesome for me because I watched the movie and I was seeing, like when they talk about New Century Bank going out of business or Option One. I remember where I was during those moments. I remember when those news broke. I was at some of those events that they were going to back in the day. And so, I am really excited. Like I said, we spent a lot of time. I'm moving some of my portfolio. I'm selling off some of my assets that have been around for a while to put into cash so that I've got some stuff available. I'm doing a lot of marketing out to investors. I mean, we go down the county records and pull up people who have bought a property in their self-directed IRA or who have lent out of the self-directed IRA, and we drop postcards out to them. I've got a book that we put together, a 52-page ebook that I give away. If your listeners want a copy of the book, they can get a copy of it. Glad to give it to them. Just trying to educate the audience because let's face it, a lot of people 6, 7, 8 months ago were like, "Oh, should I cash out? Should I do a line of credit to buy all the Bitcoin that I should buy?" You know what I mean? Or their 401ks have took a hit, especially or their IRAs or investment accounts have taken a hit in the last month. Now, yes, it's rebounded back a little bit, but first of the year, people are looking to do things with their investments, and as they start seeing housing crisis starting to creep up and things like that, people getting laid off. And like right now, we're in the middle of what the government shut down where these people aren't getting paid. There's some economic factors that you look, history is going to repeat itself. And you can either struggle or run around screaming, the sky's falling, or you can take what you learned, what happened 10 years ago, learn what's going on and how to take advantage of that and how to make money in a a bear or bull market. And be able to sleep at night and really be able to do a lot of good too. I make the joke about making America great one mortgage at a time, but we literally are doing that by keeping people in their houses, not foreclosing, not dropping. A foreclosure in a street drops the values of the homes at least 10 to 15 grand, with a foreclosure taking place. If we can avoid that, we're doing a lot of good for a lot of people.
Well, I just want to say thank you very much for coming on.
Glad, man. Hey, it's been great, dude. I'm always glad to help out.
Some last awesome words to the listeners.
What I would do, anybody who's a new investor, a new real estate investor, is take the time and get educated. That's the biggest thing I would do. And I know that a lot of people like to go to these workshops or seminars. They got some of these HGTV stars and things that are coming out, to advertise and they're going to show up. Do yourself a favor. Go online, check out the reviews, get educated with YouTube and Vimeo and all these media channels out there that are available, social media. There is so much great information. Get a chance to learn, see what that person or that niche is teaching, if it's something you really want to do. Because if you don't want to do it, hey, you don't have to. Okay? Notes may not be the right aspect for you, but maybe a landlord or Airbnb, that's totally fine. The biggest thing that I can tell you that separates for those that are successful from those that are wanting to find success is taking action. Learn.
Yeah, and not being blinded by the emotion of it.
Yeah. Go learn. That'll take the emotions away from it. If you like how people teach, great. If you don't like how they teach, great. Don't buy that stuff. Don't get that training. Go to somebody else. There's a lot of opportunities out there in the market, whether it's up or down. Just need to know who's doing deals and talk to people. Hey, what do you know about this guy? What do you know about this gal? Are they really legit about what they do? And then check out and see what they've got online. Because literally, if somebody's not putting something online and they're kind of shady, it feels kind of shady, they're probably pretty shady. Okay? So that's a big thing. The only thing you guarantee by not taking action is failure. That's the only thing you guarantee by not taking action is failure.
And people could find you. I forgot to say that before the last part. How can people find you? You have your podcast. Can you share just a few places?
Very easy. You can go to WeCloseNotes.com. WeCloseNotes.com. That's my main website. The name of my podcast is The Note Closers Show. I'm all over Facebook. If you just look for @OneScottCarson or We Close Notes hashtag or anything like that, you'll be able to find me. It's extremely hard not to find me in today's society, things like that. But yeah, check. I'm Scott Carson. I am not the soccer player that plays in Europe, but I'm pretty damn good at keep making goals. I'll tell you that.
Scott, awesome. Thank you very much for coming on.
Thanks, bud. I appreciate it so much. So honored here. let me know. Like I said, any of your listeners will need some help, feel free, drop me a message. I'm glad to shoot them a copy of my book at no cost.
Awesome. Bye.